U.S. stock markets closed lower today. The S&P 500, which was on the verge of hitting a record high, reversed course and closed lower due to weakness in big tech stocks. Although inflation data came in lower than expected, boosting hopes for a Fed rate cut and pushing down Treasury yields, the upward momentum proved short-lived. President Trump announced that a basic trade agreement with China has been finalized, stating that China will supply rare earth elements up front, while the U.S. will allow Chinese students to enroll in American universities. However, investors viewed the deal as lacking in detail, assessing that while it marks progress, it remains insufficient. Another factor that dampened investor sentiment was rising tensions in the Middle East. Oil prices surged more than 4% after Reuters citing sources reported that the U.S. is preparing to withdraw some personnel from its embassy in Iraq. The lower-than-expected rise in May's consumer price index supported the view that inflationary pressures from tariffs have not yet fully materialized. This suggests that companies may have absorbed the costs themselves, or that the effects of the tariffs have been temporarily delayed. Following the CPI release, President Trump renewed his call for a 1 percentage point rate cut by the Federal Reserve. Meanwhile, the swap market is pricing in 2 rate cuts by the end of 2025, and traders are assigning roughly a 75% probability to a cut as early as September. Although markets closed lower on Wednesday, stocks have staged a strong rebound of over 20% since the April lows. This rally has been fueled by optimism that President Trump will lower tariffs after reaching trade agreements with countries around the world.